impact. And a lot of jewelry, for example, in China is funded by consumers selling back old jewelry. China is a market for platinum jewelry. That resulted in it growing to almost a 2 million ounce a year jewelry market, which is significant given the total sort of global demand for platinum across all applications is only around 7.5 million ounces.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Edward Sterck, Director of Research for the World Platinum Investment Council, joins us today. Edward is here to give us some insight and outlook for platinum coming off of the recent Shanghai Platinum Week 2024. And we are delighted to have Edward join us once again today. It's time to saddle up and silver up for Edward Sterck. Edward, welcome back to SBTV. How are you doing?
I'm good, thank you, Patrick, and thanks for inviting me on to have another conversation with you.
Glad to have you back on. You are the platinum guy, so we are very happy to have you back on. So with that, I want to start off with the recent Shanghai Platinum Week that was held just this month, July of 2024. Can you tell us a little about Platinum Week and perhaps maybe one or two of the main things that drew the most attention to the future of platinum?
Yeah, thank you. So it was actually, we held it last week. WPIC is one of the co-organizers of the event. So, we put a lot of effort into making sure that it goes off seamlessly and getting, the right sort of presenters there and so on. I think one of the things that's really important about Shanghai Platinum Week is that prior to us setting up the event in 2020, there really wasn't a platform for market participants in the West to engage actively with market participants in the East and specifically within China. Now, China's the biggest consumer of PGMs, so this was a bit of a kind of absence in the market or a hole that needed to be filled. And it's just turned out to be a fantastic success. So in terms of the kind of annual schedule, Shanghai Platinum Week now sits at the midway point in the year between London Platinum Week in May and New York Platinum Week in September. And it's a slightly different event. It's kind of a unified one where everything occurs under one roof, whereas London Platinum Week and New York Platinum Week are a little bit more sort of scattered around the respective cities. And I think the key thing is that China is the biggest consumer of PGMs globally. It's quite an opaque market for us in the West to get a good understanding of. And if you go and spend time in China, one of the things that I found very interesting in my travels last year is actually that works both ways. The Chinese market participants don't really have a great deal of visibility of what's going on in the rest of the world. They don't really fully understand their supply chains, in my opinion. And so Shanghai Platinum Week has turned into this really great venue for the West and the East to come together, get to know each other better and get a better understanding of what each other is up to. In terms of some of the kind of key statistics probably from Shanghai Platinum Week, we had more than 500 individual participants in person at the event, representing, I think it was something like 400 different organizations or thereabouts. We also live streamed it within China only, and the statistics for that are actually quite staggering. So over the course of the event, we had over 770,000 online viewers of the of the event. So more than 750,000 people actually took interest in this, which just shows you really how important PGMs are as strategic metals to China, and how many different industries ultimately that they are utilized within. I guess probably the biggest and most interesting takeaway from the event itself was probably the announcement from the Guangzhou Futures Exchange, or GFEX, regarding their planned physically settled platinum and palladium futures. And they used Shanghai Platinum Week to give the market information as to what the expiry months were going to be, the form of metal that could be used as good delivery, and also some of the other interesting features that are somewhat unique for their planned platinum and palladium futures, and how those might benefit market participants.
Since you touched on the Guangzhou Futures Exchange, or the GFEX, I understand it's going to be an exchange where, as you said, you can take physical delivery of platinum and even palladium. And there's also another type of physical delivery I believe you may be able to take. I mean, I've heard it being called a sponge. If you could kind of elaborate on that a bit.
Yeah, absolutely. So, for the other futures exchanges around the world, dealing with precious metal, physically settled contracts, typically ingot or bar is the only form of good delivery that's accepted. So, up until fairly recently, if you looked at NYMEX, for example, it was 50-ounce bars. They've now expanded that a little bit, so you can deliver up to 6 kilo bars, but it's still fundamentally in the form of bars or ingots, which are the same thing. The unique feature that the Guangzhou Futures Exchange is planning for is that bars can be used as good delivery, but so can platinum and palladium sponge. Now, this is effectively just powdered platinum and palladium, but it's the form that automotive and industrial users of platinum and palladium need their metal to be in order for them then to process it into catalysts and other forms of the metal that are used in industrial and automotive applications. So for those automotive and industrial end users of the metal, it potentially provides a really unique and more direct mechanism for A, sourcing material, and B, allowing them to manage price risk. And I think actually one of the things that's worth focusing on in a little bit more detail is the impact of price risk management in China and what this might mean going forwards. So far for PGMs, that the Chinese market participants don't have any ability to manage price risk. There are no futures available to them within China that they can utilize for that purpose. That's in contrast to gold, where the futures are available, and fabricators of things like gold jewelry and gold investment products can manage that price risk. So if you don't have that ability in platinum and palladium, as a market participant or a fabricator of platinum jewelry or platinum investment products, what do you do in order to minimize your risks? Well, ultimately, you have to charge a big premium on the sale of the product. And also when you buy back product, and a lot of jewelry, for example, in China is funded by consumers selling back old jewelry in order to purchase new pieces, you also have to charge a big discount on the buyback. So that means you have a large bid offer spread effectively between the sales price and then your buyback price. And for consumers, that can potentially be quite damaging. When prices are going up, as we saw with platinum in the course of the early 2000s, that doesn't matter too much. Consumers still feel like they're getting a better price when they sell back than they originally purchased for. And ultimately for China as a market for platinum jewelry, that resulted in it growing to almost a 2 million ounce a year jewelry market, which is significant given the total sort of global demand for platinum across all applications is only around 7.5 million ounces. However, when prices start to come down, as we saw for much of the last decade, that bid offer spread really begins to hurt consumers. And if those consumers can contrast that to, say, for example, gold, where they see that they, on selling back old jewelry, they get a much closer value to that of the contained metal. It really kind of erodes consumer confidence in that. And for jewelry, as an example, we've seen jewelry demand in China decline to only 400,000 ounces a year. So I think one of the really interesting things that the ability to manage price risk could bring back within China is perhaps to recapture some of that lost 1.6 million ounces of consumer demand for platinum jewelry, which could be quite material in terms of the fundamental outlook for platinum going forwards.
Platinum ingots, platinum bars. I think typically in the bullion shop we see them as 9995. Is this powder sponge going to be that same purity level 395?
That's exactly right. So it'll be like for like basis versus the bars for product that's sourced internationally. There's some slight differences for domestic origin material, but ultimately the purity levels have to be the same as that for the bars.
I did take a look at it a bit, and what I came across was a statement saying it was the Guangzhou Futures Exchange is said to fill a gap in the Chinese market, providing the mechanisms to discover the domestic prices of platinum and palladium in China to help businesses hedge price risk, which you just went over. But the keyword I found in this statement was domestic prices. And does this mean we are going to see a difference perhaps with the platinum and palladium prices in the West versus the prices in China, the same way we're seeing with silver on the Shanghai Futures Exchange?
I don't think it will necessarily. I think that's probably more just the kind of phraseology and ultimately their kind of focus on delivering something to the China market that wasn't there previously. Ultimately we would expect the ability to manage price risk and the GFEX futures being available not just to Chinese market participants but international participants. That creates an arbitrage opportunity versus the futures exchanges in Japan and the US. So you'd expect that arbitrage to ultimately close any price differential, with the possible exception of any tax considerations within any different geographic jurisdiction, which can result in effectively an embedded difference that never really changes just because of the way that the underlying products might be treated from a tax perspective.
If you're enjoying this interview with Edward Sterck and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, when you store with us, you can use your bullion as collateral for a secured loan? Silver Bullion's peer-to-peer bullion secured loan program enabled people storing with us to have some $600 million plus worth of loans and zero defaults. To find out more, go to www.silverbullion.com.sg and click on the P2P Loans tab. Or email me, patrick@silverbullion.com.sg, and I'll help to get you started. Okay, interesting stuff there. With all the people there, I guess, from the mining sector, how is the supply of platinum versus the demand of platinum? Is there a general consensus from the who's who that was there within the industry that platinum demand still looks to outpace supply?
Yeah, I think the kind of the on the demand side, the current thinking is very much determined by the big slowdown we've seen in battery electric vehicle market penetration growth rates. We're continuing to see growth in the drivetrain electrification, but at a much slower rate than was expected in the past, and that's really beginning to feed into medium to longer term expectations that translate into higher for longer automotive demand. So this is the PGMs going into the catalytic converters for internal combustion engine and hybrid vehicles. So that's really sustaining demand over the actually probably near to medium term is more accurate. Longer term, of course, for platinum, we've got the big growth in hydrogen related demand for the metal. Palladium doesn't benefit from that in the same way based upon current technologies. However, on the supply side, I hosted a panel of sort of South African experts on mine supply during Shanghai Platinum Week, and the discussions there were very much around the challenges they're facing in terms of sustaining output. So, one of the important things to remember about mine supply for platinum and palladium is that these metals are not produced on their own. You don't have a platinum deposit or a palladium deposit. You have polymetallic deposits that contain the 6 platinum group metals, so platinum, palladium, rhodium, and the other 3. Then you've got gold, and then you've got base metals, so nickel, copper, and chrome. So the pricing of all of these commodities are inseparable in terms of working out the economics of an operation. And the biggest headwind facing primary mine supply at the moment has been the dramatic decline in the prices of rhodium and palladium over the course of the last 18 months or so. And that's really eroded the profitability of the primary producers. So if you look at South Africa as an example, rough numbers, around 50% of primary mine supply in South Africa is currently loss-making. And that creates real challenges for the industry. So far, we haven't seen any major reactions from the miners. I mean, they've announced cost-cutting exercises. They are unfortunately shedding jobs, but it's not really translating yet into reduced guidance to the market in terms of near, medium, and longer-term output. But ultimately, if we don't see an improvement in those commodity prices, the panelists were telling us at Shanghai Platinum Week that there were significant risks to the downside to mine supply. Added to that, there are some challenges facing recycling as well. I mean, just to kind of summarize them, they're mainly regulatory. So they're challenges in the US and in China that are causing problems for the recyclers in sustaining output. So, putting that together with the sort of stronger demand projections, ultimately we expect platinum to remain in a deficit for the foreseeable future, with potential downside risks to mine supply, potentially feeding through to deeper deficits than a forecast. And for palladium, where the sort of general expectation is that palladium will at some point go into a surplus, just because palladium is so dependent upon internal combustion engines and catalytic converters. That's roughly more than 80%. It's about 82% of total demand for palladium. At some point it will go into a surplus. The question is just when. On our forecast, we see that tipping point coming in 2026. But there are lots of things that are resulting in that tipping point continually being pushed back. And it's certainly possible that palladium may remain in a deficit for much longer than people are expecting as well. So look, I think in aggregate, the underlying fundamentals for both metals in the near term are pretty robust and attractive. And we would expect to see that begin to reflect in market price expectations as time goes forward.
I guess, as I'm listening to this, what I'm thinking about, is there a number maybe that the miners kind of see as a number, price per ounce of platinum, let's just call it, where it becomes not so viable business to mine platinum?
You've got to factor in all of the different commodity prices into this. It's quite hard to put a pin on any one individual commodity. But I'd say that if we look at where the aggregated sort of value of those commodities are at the moment, which is known as the basket price, if we look at where that is right now, and so much of South African production being loss-making at current levels, we obviously have to factor in the strength or weakness of the rand versus the US dollar as well. And the rand has been strengthening recently, which is unhelpful from this perspective. I think we're kind of at the threshold of the limit of what the miners can endure. If you ever ask any of the miners, what their sort of price outlook or expectations are, they're never going to answer that question. So we don't have clear guidance from them on that perspective. We as an organization, given our structure, also don't give price forecasts. But suffice to say, where we are right now is pretty much on the limit for these guys, I think it'd be fair to say.
One more question with supply here. Being that Russia is a major supplier, producer of platinum, and it's also no secret that it's a country currently under sanctions. Has Russian platinum supply been cut off by these sanctions, or is it still getting into the markets?
So, just in terms of the numbers, Russia produces around 11% of global platinum supply, and slightly over 40% of palladium supply. So it's much more important to palladium than it is for platinum. But of course, in automotive applications, there's quite a high degree of substitution that's possible between the two metals. So what happens in one metal does feed through to impact the other over quite extended periods of time. The ability to substitute is quite a slow process for automakers. In terms of the sanctions that have been applied to Russian origin material, they're no longer good delivery from an LPPM perspective, so the London Platinum Palladium market. That means they can't be traded through the majority of exchanges around the world. There's an import surcharge in the UK that's applied to them, which I think, if I recall correctly, is 15%. And then the US has outright banned any imports of Russian origin material into the US. However, for the rest of the world, you can kind of still use them. So the short answer ultimately is that Russian origin material is still flowing through to the market. If you are an automaker or an industrial end user of platinum and palladium that doesn't need to trade it through an exchange, then really there's no limitations on buying Russian origin material and using it. And I think, whilst obviously the purpose of the sanctions is to try and punish Russia for its activities and sort of warmongering within Ukraine, the reality is, from a global supply-demand perspective, actually we just can't exclude Russian origin material in terms of PGMs totally from the market. There aren't enough alternative sources. We can't rely wholly on South Africa and byproduct nickel production and the sort of two PGM mines in North America. We ultimately, collectively as a world, if you want to continue to produce vehicles at the volumes that they are being produced right now, you do need to still have some reliance upon Russia as a source of material.
Edward, being that Platinum Week was in Shanghai, China, can you give us some insight as to the need for platinum for China and the fact that do believe China has listed platinum as a strategic metal. What components might platinum be used for that it would be labeled as a strategic metal?
Oh well, I mean, the uses are myriad really. So if you look at the kind of breakdown of the market in rough numbers, and this is on a global basis, but you know the splits are broadly the same for China. Automotive end uses roughly around 40% for platinum. So that's the catalytic converters that treat exhaust fumes from internal combustion engines and reduce the level of harm that they can cause. You've then got around 30 to 35% of end demand is in industrial applications. And this is where that's kind of a catch-all for everything that doesn't fit into automotive, jewelry, or investment. So perhaps finishing off on jewelry, that's sort of 20% of global demand. Investment swings between -5 and sort of plus 20%. And then the balance really is those industrial applications. Now they range from everything from spark plugs to hard disk drives, fiberglass manufacturing, semiconductors. So we're seeing quite a big increase in demand there, related to the sort of growth in AI. Small compared to the overall demand picture for platinum, but kind of interesting to see that come through. Medical applications, so things like stents, electrodes for pacemakers, cancer treatment drugs. So cisplatin is a major, and associated drugs are a major tool for combating cancer, and they actually contain platinum within the drug. You've then got things like petrochemical catalysts, silicone catalysts. So things like your kitchen utensils actually contain minute traces of platinum as a catalyst to set that silicone. And Also within the fertilizer industry for the production of ammonia. So it's really crucial with regards to a lot of different sort of areas. And of course, the key one going forwards is green hydrogen. So platinum is used as a catalyst in the electrolyzers for producing green hydrogen, and also in the fuel cells for taking that green hydrogen as an energy carrier and using it to produce electricity. So that electricity can be used to power vehicles, or it can be used in sort of remote locations for off-grid energy production, or in ships and things like that. And actually, increasingly, we're seeing the aviation industry experiment with using those fuel cells for things like regional airliners and stuff. So a lot of key applications that are quite important to every country around the world. Now, for China's domestic supply of PGMs is really limited to just recycling what's already in the country. They don't have any material mineral deposits that are PGM containing. And so for China, I think one of the key things is building a domestic reserve of those strategically important minerals in the form of jewelry and investment products that can be tapped into in the future if they ever encounter any problems with the supply of raw materials from the major production centers being Southern Africa and Russia. So with that in mind, actually the topic I presented on at Shanghai Platinum Week was how to develop that domestic reserve. And one of the two key things were the price risk management that we have already discussed, but also platinum is subject to some fairly tortuous VAT regulations within China. So harmonizing platinum's VAT with that of gold would be key to promoting the growth in platinum jewelry and also platinum investment products, and ultimately those kind of together create a domestic reserve of material for China's future strategic needs.
Interesting. So it's possible to build up a platinum reserve by using jewelry.
Yeah, I mean, in a way, if you look at, I mean, other countries around the world, so just let's take the UK, for example, where you've got listed platinum ETFs. Over the course of the second quarter of this year, we saw more than 500,000 ounces of material flow into those ETFs, which have vaulted in the UK. So, China doesn't have that sort of thing at the moment. There are no platinum ETFs in China, so they exist in other countries around the world. Those are kind of almost like strategic reserves for those countries that, at the right price in the future, the holders of those ETFs might choose to sell them into the market, and then they're available for domestic use in strategic applications.
Oh, that's pretty interesting there. You mentioned also green hydrogen. What would be the difference between hydrogen and green hydrogen?
So that's a good question, and I mean you can kind of open a bit of a Pandora's box here with what's called the hydrogen rainbow. But the existing market for hydrogen for industrial applications is slightly more than 90 million tons a year globally, and 99% of that currently is produced from steam methane reformation of fossil fuels, predominantly natural gas. Now, for every ton of green hydrogen you produce, you effectively release about 6.5 tons of CO2 into the atmosphere. So it's a really polluting industry, but it's also critical for things like producing ammonia, fertilizers, all sorts of different applications, hydrogenating, you know, organic chemistry and things like that. So it's one that we kind of need. Now, that's called grey hydrogen. So that's the hydrogen produced from fossil fuels. Green hydrogen is where you use electrolysis of water powered by renewable electricity to produce hydrogen. So that's effectively, if you remember your kind of chemistry classes at school, stick a couple of electrodes in a beaker, you get a beaker of water, you get bubbles coming off both electrodes, and it's oxygen on one side and hydrogen on the other. So this is just kind of like a much more advanced version of that. That's much more efficient. And that green hydrogen can be used for all of the existing addressable market in terms of current uses for grey hydrogen. And it can also be used in, in fuel cells as an energy carrier to generate electricity. There are other colors of hydrogen. So blue hydrogen is effectively steam methane reformation of natural gas, but that carbon dioxide is captured and sequestered. So it's just effectively not off-gassed into the atmosphere. And that's called blue hydrogen. There's pink hydrogen, so that's electrolysis using nuclear power. And then there's a whole variety of other sort of more niche colors that are probably not worth going into right now. But there's a number of different ways of producing hydrogen. I mean, one of the interesting things I intended to mention but forgot to is apparently in China they're using hydrogen enriched water to promote plant growth now. So you get a 20, if you irrigate with hydrogen enriched water, you get a 20% bump in yield, which was completely new to me from there. But I think that's a bit of a niche niche application for hydrogen so far. Obviously, that hydrogen has to be produced with platinum catalysts to make it green.
Okay, now I know why you called it a rainbow: gray, blue, pink, green, and other colors. Okay, I'm gonna have to learn about this one. Uh, Platinum, as let's just say bullion as an investment. Do you see this segment growing?
Yes, we do actually. So I think that if we look at the world as a whole, we are seeing a lot of demand for gold investment product, and there's a bit element of spillover from that into the PGMs. As I mentioned, we've seen that being reflected in ETF inflows recently. Obviously, those ETF inflows are physically backed, so that requires bullion. But we're also seeing really strong growth and demand from certain geographies. And I'm just going to highlight China here. Now, this is where we've been working with our product partners in China. So we've got two offices, one in Shanghai, one in Shenzhen. And we've been helping product partners in China to effectively design, market, and sell platinum investment product. And that's been a really successful exercise of ours over the last few years. So we've taken that market from zero up to zero in, say, 2018, up to last year being almost 200,000 ounces a year. And so the Chinese consumer sees platinum trading at a significant discount to gold, and sees that as an investment opportunity with an expectation that platinum will play some kind of catch up with gold in the future. That's the domestic picture and their view, not necessarily ours per se, but ultimately we're seeing continued growth in demand in China for that investment product from a retail audience. And we're also seeing strong demand in North America in particular, and some of the other geographies around the world.
Okay, Edward Sterck, you've given us a lot of info and a lot of things to think about here, including rainbows. So, with that, I want to thank you and ask you how the good people out there can follow you and get more platinum insights.
Yeah, so all of our research is available for free on our website, platinuminvestment.com. And you can also find our LinkedIn pages and my personal LinkedIn page and access our material through that. So we distribute our research through LinkedIn as well.
Edward Sterck, the Director of Research for the World Platinum Investment Council. I want to thank you for Again, the great info on Platinum, and I look forward to catching up with you again in, let's say, Q3.
Sounds good. Look forward to it. Thanks, Patrick.
That was Edward Sterck sharing his views and insights on Platinum. To see more of Edward's views and work, please go to www.platinuminvestment.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.